Morning, this is Tom Alexander. It is Saturday, June 22nd. It's about 10 a.m. Eastern time in beautiful Charleston, South Carolina. This is the weekend stock market update that I do every weekend. If you're finding me for the first time, please subscribe, please like the channel. You can go to, let me show the screen. You can go to alexandertrading.com here. Click on weekend update, and for free you can see all my weekend updates. You click on weekend update and you will see, you'll have the opportunity to download a PDF that gives the levels. You can see what I said going back as far as you care to peruse the weekend updates. Again, these are free. I also periodically send out updates in a newsletter. If you're not on my list and you would like to receive that, shoot me an email, tom@alexandertrading.com, and just say, please put me on the list. I'll be happy to do it. Okay, let's talk about this market. We remain in a very bifurcated market, as we all are aware. We had a little bit of a dip in the NDX and SPX. The Dow closed on its weekly high. The Russell is in a chop fest. So it's pretty much business as usual as it has been for the past several weeks. So let's take a look at a couple of things. And this is the SPX. Now, one of my pet peeves about when I'm looking at Twitter and what's going on Twitter, the retail trading world, actually the institution world, the macro people as well are guilty of this, are obsessed with picking tops and bottoms. And to trade effectively in any time frame, what you have to do is you have to identify the trend in that time frame and maybe 1 degree higher, and then look for opportunities to trade with that trend. The levels you see on this chart are the relevant levels. I don't use magic numbers. I don't use anything other than price action itself to help me determine what levels are, what the important levels are, because the market itself, market participants determine that. And if you want to test this, you can go back and look at the weekend reports that I've been, I think I don't know how many are on there, but going back a year or two, and you can go back and just pick a weekend and see if those levels held, or the importance of those levels the following week. And I think you will find that there's nothing more accurate than just using price action to help you determine levels. So from a trading perspective, the trend is up. We're making higher highs and higher lows. You put any series of moving averages on here, we're above those moving averages. And that's pretty much true across all time frames. Now, if we go down to a 30-minute chart in the SPX, you can see here higher highs and higher lows. Now on Friday, maybe we've broken that pattern. We took this level out right here. Right here, we did take this out, a minor level, and we made a lower low, a lower high, a lower low, a lower high, and then we spent Friday trading in this range. So, and I trade different time frames, like many of you do. I trade different instruments. I trade options, ETFs, futures. I trade intraday, I swing trade. I trade a lot of different stuff. So from a day trade perspective, when I come in on Monday, of course, it's depending on what happens in Globex. Remember, Friday was an option expiration, so there could be some crazy stuff on Monday, adjusting for that. But nevertheless, the levels that I need really are Friday's high and low from a day trade perspective. And on the really short term, the time frame up, I trade on a 5-minute chart. The time frame up from that is a 30-minute chart. So I want to know what the trend is on a 30-minute chart. Right now, it's sort of partly cloudy, potentially down, because we do have the lower lows, lower highs. That's all I need to know. That's all the analysis I need to know. I don't need magic numbers. I don't need 17 different oscillators, MACD, pitchforks, astrological stuff. Yeah, no magic. Just price action. It's market making higher highs, higher lows. It's market making lower lows, lower highs. Is it above or below moving averages? Pick two. It doesn't really matter. Just use whatever it is you use consistently. Okay, enough about that. Let's take a look at the NDX. And the NDX is in a similar position as the SPX is logical because they're both driven by about 5 or 6 stocks at the moment. Here are your levels. Now, one thing I'll point out that can be helpful. Let's just use this April low. So, what has been the character of the retracements off of this April low so far? Well, in the NDX, let's see, and you can do the same exercise with the SPX. About a little less than 3%. About 3.7%. Well, this is the greatest retracement so far. So if we were to retrace about that, we'd be down here, we'd close this gap. That's logical. This is a logical, quote unquote, target, and it would fit the personality of this particular trend. So this area in here between 19,212 and 19,353 would be an area of interest if indeed we do continue lower next week. Okay. And you can use the same exercise for the SPX or anything else that you trade. All right, let's take a look now at the Dow. So the Dow, again, traded up on the week. Now, when you have something that occurred in the SPX and the NDX, like we saw at the end of last week, where you had wide range, rather dramatic down days and reversals, and then you have the other indices that do not participate, I'm suspicious. I'm not thinking, okay, that's the all-time Armageddon top of the market, and now we're on our way to zero by Friday week. When you have the other indices sort of not participating, or in the case of the Dow trading exactly opposite from that, I'm suspicious. In bull legs and bear legs, in bull markets and bear markets. So let's just take the bull legs and the bear legs within bull or bear markets. When the market is making a real move with institutional support and conviction behind it, they'll all move in the same direction. All 4 indices will move in the same direction when there's a real move, when something substantial is underway. Now, you will have underperformance or outperformance depending on the macro situation among the indices. But I challenge you, I've been doing this 40 years, you cannot find a bull market or a bear market where the indices did not, in general, move in the same direction. And that's true of the bull legs and the bear legs within the bull markets and the bear markets. So what that top meant on Thursday in the SPX and NDX remains to be seen, but you're not going to have both of those going straight down and the Dow going straight up for very long. Okay. So this is the Dow, and of course the Russell remains in an absolute chop fest. And I'm watching the Russell very, very closely because it represents, represents a broader market, and it's off its year high, but it's sort of in a balance, in a wide ranging balance, i.e. consolidation period. So I'm watching it very, very closely. If we begin to see strength in the Russell, it could portend a true broadening out of this market, and perhaps an outperformance by the Dow, the Russell, against the SPX and the NDX. So that's something to keep an eye on. Okay, the other thing that I use, if you guys have followed me from a technical perspective, real simple stuff, NYSC data, and specifically NYSC advancing issues. The red line is a 10-day moving average of NYSC advancing issues. The green is a 5-day moving average of NYSC advancing issues. The blue is down here, the histogram is breadth. We traded down to a level back in the end of May from where, and you can go back and look at the weekend reports around this area. I pointed this out, from where you can get very strong moves, especially in bull trends. We got that. Now, what has happened since then is that it's been a pretty tepid response in terms of getting a breadth expansion. So this is something, this has got to change too. We're going to see a big expansion in breadth, or maybe we take this out and go to this next lower level down here. If we were to do that, this would be a real interesting level and an inflection point, and likely a genuine buying opportunity. But that remains to be seen. Okay, guys, I hope you found this helpful. If you did, again, please like, please subscribe. If you want to get my written reports, go to alexandertrading.com. Well, you can just email me, tom@alexandertrading.com, and I'll put you on the list. You guys have a great weekend. I'll speak with you again soon.